Hello and welcome to a fresh episode of Legal Wrangle on Indirect Taxes. Today we will present you with the decisions relating to levy of VAT upon activities of business consultancy services, availability of exemption to captively consumed clinker during manufacture of cement supplied to SEZ units, excisability of printed rolling paper formed out of duty paid blank paper, liability of service tax on rendering of consulting engineer services, and treatment of roasting of iron ores as manufacture. In our very first case, the revenue has challenged the tribunal's decision whereby the levy of VAT was deleted by holding the activities of business consultancy services and implementation of ERP software as pure services not involving any sale of goods or transfer of property in goods in the execution of works contract. Let's have the details from Prabjot.
The assessee, that is IBM India Pvt Ltd, is a registered dealer engaged in development and sale of ERP software and networking products as per the requirement of its customer. As per assessee, both business consultancy services and ERP implementation are independent. Assessee argued that in the activities of business consultancy and ERP software implementation, it provides only services and no transfer of property in goods is involved. Therefore, the assessee is liable to pay only service tax.
The High Court favoured the assessee and held that if during the course of ERP implementation any software comes into existence, title of such software prepared rests with client and not with assessee. The software thus prepared cannot be considered as goods available in market. The assessee is not liable to pay VAT thereon. The High Court also held that the entire consideration received for providing services to the client have been subjected to service tax. Therefore, no portion of the consideration received could be attributed to sale of the software. In our second case, the issue involved is whether the assessees engaged in the manufacture of cement are eligible for exemption under notification number 67/95 CE in respect of clinker captively consumed for manufacture of cement supplied to SEZ units and SEZ developers. Let's have some more details.
The revenue opined that as per the proviso 2 notification, the benefit is not admissible if the finished goods are exempted from payment of duty or are chargeable to nil rate of duty. Accordingly, since no duty is paid on cement cleared to special economic zones, the assessees are liable to pay duty on clinker captively consumed in respect of such cement.
Sestat held in favour of assessee by holding that the final product, that is the cement, cleared to SEZ units is not exempted under any notification issued under Section 5A of Central Excise Act. The Sestat also held that the goods supplied to SEZ unit would constitute as export and no duty can be levied on the clinker used in the manufacture of cement as the finished goods are supplied to SEZ units without payment of any duty by following procedure of Rule 19 of Central Excise Rules and Rule 30 of SEZ Rules. Before going to our next case, let's take a short break and then we'll discuss whether printing of logo on blank rolling paper will amount to manufacture or not.
In the absence database, Rule 56J can be used as an effective tool
on the controversial issue of Rule 56J.
Now, on performance, you have to have a certain kind of, you have to lay down the parameter.
to either eliminate the inefficient or to compulsorily retire the bad elements from the department.
Supervisory control over these things has become completely lax.
Are we judging them based on those parameters?
That conduct and reputation would be a relevant factor in invoking everything.
Suspicious conduct or a corrupt conduct has been reasonably established.
In our third case, the key issue was whether a duty-paid blank rolling paper, which later gets converted into special paper after printing of logo and name of a specific product having distinct character and use of its own which it did not bear earlier, would amount to manufacture and hence liable for excise duty. The assessee is Fitrite Packers engaged in the business of printing rolling papers. Now let's get the details.
The assessee had purchased duty-paid GI paper from the market and carried a process of printing according to the design and specification received by Parle Company. Consequently, the AO passed an order holding the aforesaid process as manufacture and thus liable for payment of excise duty. On appeal, the Sestat, however, reversed such order by holding that printing was only incidental and primary use of GI paper was wrapping, which was not changed by the process of printing.
The Supreme Court, after hearing the parties, observed that although the GI paper was meant for wrapping and the end use remained the same even after printing, however, such printed paper bears the logo and the name of specific product of Parle Company and hence confined to only that particular and specific product of the said company. Therefore, now it was a special wrapping paper with distinct character and use of its own which it did not bear earlier and hence liable for excise duty. In our fourth case, the assessee, that is a constituent laboratory of the Council for Scientific and Industrial Research, has contended before the Sestat that they being a society were not liable to service tax and therefore rendering of a few specialized nature engineering services would not detract it from its main business activity. Let's have the details from Prabjot.
The assessee is registered under Registration of Societies Act 1960, having an elaborate mandate of environmental science and engineering since 1958, and had engaged scientists from various disciplines to undertake various studies and projects in the field of environmental science and engineering. The revenue opined that the assessee was rendering consulting engineer services without being registered as service provider, and accordingly he issued a show cause notice demanding service tax.
The tribunal member held in favor of assessee by holding that the lower appellate authority has relied upon the unauthenticated source to conclude that services rendered by assessee are engineering projects. Therefore, the tribunal concluded that the project titles may in general indicate content, however, it cannot be a reliable source to decide any specific finding, and determination of tax liability without examining specifics is inappropriate. In our last case, the key issue before the Supreme Court was whether, as per the notification for 2006 CE, only ores are exempted from payment of CVD and it excludes concentrates as it is a different product than ores. The assessee Star Industries was engaged in manufacture of ferroalloys. Let's have some more details.
The assessee had been importing roasted molybdenum ore and was claiming the benefit of nil CVD duty in terms of notification number 4 2006 CE as available to ores. The revenue was of the view that the ore imported by assessee was actually ore concentrate, which was different from ores, and therefore not entitled to the benefit of notification number 4 2006 CE.
The Supreme Court observed that as per the amendment in Note 4 of Chapter 26 of Central Excise Tariff Act 1985, the process of converting ores into concentrates would amount to manufacture. Therefore, it cannot be argued that roasting of ores and converting the same into concentrates would not be manufacture. The Apex Court also observed that with the addition of Note 4, a legal friction is created treating the process of converting ores into concentrates as manufacture, and therefore all the consequences thereof would automatically follow. Well, this brings us to the end of this episode of Legal Wrangle on indirect tax. You may write to us your comments, criticism and counsel at editor@tioltube.com. Please do subscribe to TIOL Tube to remain updated. It's free and will keep you updated on our new posts. Have a good day.